All right, very quick video to cover the recent failure of Silicon Valley Bank. It boils down to this. When you're investing in bonds, when interest rates go up, the value of your bonds go down. So that particular bank, Silicon Valley Bank, had a lot of assets on its books that were contracted during the COVID era. During the COVID era, interest rates were at an all-time low. So they had all these assets that were contracted at very low interest rates. Now that interest rates are up, these assets are worth a lot less. So it's not a problem if they don't need cash, but it is a problem if they need cash and they now need to sell these assets. And that's exactly what happens. If a bank needs cash and they need to sell assets, it's usually not a problem unless these assets are worth less. So now these assets are worth a lot less. If they sell these assets, they're realizing a huge loss, and that will look terrible to the investors. And so what they did is they went and tried to raise more money, and it didn't work. It basically just shed light on the whole situation. All of a sudden, everybody can see that you have all these assets that are worth a lot less. They can see exactly what's the unrealized loss that you have on the books. And they're saying, listen, I'm not taking no risk. I want my money out. I want my money out. So the government stepped in, of course, so far covered everybody up to the amount of FDIC insurance, and the rest of it will unravel over the course of time over here. So now you have to understand, in this economy, they're not the only ones with that problem. Pretty much any bank that contracted assets during the COVID era at very low interest rate has the same problem. It's not an issue if they have enough cash. If they have enough cash, they'll just keep these assets on the books until interest rates go back down, or just find a way to just keep these assets on the books. But it is a pending problem because it is a huge loss that they would have to take if, God forbid, they need to sell these assets. And it also doesn't look good because people have been warning us of an impending big financial crisis. Nobody exactly could pinpoint why. Now we know exactly why. It's during this COVID era with all these low interest rates. Now that interest rates are high, these assets are worth a lot less. Business owners are also having the same type of problem. If you were used to borrowing money at very, very low interest rates and you promised great performances, let's say you had a project and you promised an awesome performance, but it was based on very low interest rates. Now that interest rates are high, your project better be delivering, because it takes a lot more cash in order to service the debt that you've accumulated. So banks can be in trouble, businesses can be in trouble, especially tech companies who borrowed money. So yeah, it could be a crisis. It's cause for concern. If you want to hear more, comment below. If you want to hear more on this topic, comment below, and I'll either answer right there, ask some questions below. I'll either answer right there or create a longer video in order to cover this topic. It's not related to construction and real estate, but we get it.